But first, I want to kick things off with the market action ahead of a busy week for earnings. Look at the calendar right now. We can just pull that up. We got Tesla, as I said, after the bell, but also Facebook, Alphabet, Amazon, all coming your way, including, of course, Apple. We'll be digging into their investments. But when you back up and look at the earnings scorecard so far, we've got about more than a quarter of the S&P 500 market cap already reporting results so far. Expectations being surpassed by about 23% in aggregate. 83% of companies topping projections. So what does that mean for the market? And what does it mean for expectations for these companies this week? For more on that, let's bring on Phil Palumbo, Palumbo Wealth Management Founder, CEO, and Chief Investment Officer, joins us right now. And Phil, as we were just kind of discussing, I mean, we've seen strength on the earnings front, but so far the pops in these shares and the stocks afterwards have kind of been muted depending on which ones you look at. But where do you pace expectations right now?
First, thank you for having me, and apologize for my hoarse in my voice. I was coaching my kids over the weekend. So so there are three things that we're looking at. First is the continued acceleration of the economy and on the back half of this year. And with that continued acceleration, we believe markets have been, or currently now, are ahead of themselves, which we believe is the reason why companies aren't popping on earnings. So our feeling is that markets are fully valued at this point. We're of the view that it's time to reduce some risk off the table, especially on the higher beta names, move to some more quality, and just reduce some of your equity risk altogether. Most likely, investors who are long-term investors, their exposure to equities is probably higher today than it has been over the past couple of years. So with that, we believe, again, that markets are ahead of themselves based on the back half of this year. Markets are forward-looking. So we think reducing some risk at this point makes a lot of sense.
Phil, this is Emily. You talk about markets being fully priced ahead of themselves potentially. When do you see a potential correction coming, or do you think there's a certain catalyst that could serve as that tipping point for a bit of a pullback?
Yeah, it's always in the short term, it's always very difficult to time exactly when something is going to happen. I mean, you could easily melt up here too, as far as or a correction. So it's always very difficult to tell. If anything, if we had to say it could be this possible tax plan and how it comes together within Congress, we think that can create some volatility around the capital gains tax that's proposed. And so in the short term, that's what we can see. And we can also maybe see some supply constraints, increase in material costs as you start to listen to earnings and what these executives are saying. That can create some volatility because profit could possibly get squeezed. And you're seeing a labor shortage issue as well within companies. Again, that could also be an issue for profits. So if there's going to be volatility, we think the volatility can be around that, profits, in terms of margins, and also could be around the tax plan.
Yeah, Phil, I mean, when we talk about maybe rotating out of some of those names you're talking about, where do you want to put that money then? Because you're not the first guest here, even within the hour, to talk about maybe continued volatility. We had a guest on last week saying that this move on the VIX below 20 was a bit of a head fake. When you back up and look historically to other times of volatility, the great financial crisis as well as the tech bubble, it doesn't seem like that's probably going to hold when you look at history. So talk to me about maybe the best defensive plays there.
Yeah, well, first, interest rates have really been directing a lot, right? So when interest rates rose over the past 3 to 6 months, you saw the technology area start to take a breather. And some of the higher beta names trading at 10 to 20, 30 times revenue corrected anywhere from 20 to 50%. And since rates 10-year has gone down to around 153 to 154, you've seen the QQQ or technology in general make a little bit of a comeback. So, but we believe that that's probably short term and moving to quality, like I said before, makes sense. Specifically, we do like financials a lot. We believe rates will be higher 2 and 3 years from now, which is positive for financials. We like healthcare as well, which again is a quality area or defensive area of markets. Staples is another area that we think is trading fairly valued relative to where markets are at today. So it's nothing fun. These are not exciting sectors as there are some exciting industries and sectors in the technology area. But we believe where we are in the cycle today, this is a rotation that you should be doing within your portfolio to protect the downside.
And Phil, we've been talking a lot about fiscal policy, potential tax changes recently, but what about monetary policy? We're going to have a Fed meeting later this week, and I'm wondering what your outlook is for when talk about tapering may start to occur.
But they're very transparent. If you listen to 60 Minutes, Fed Powell, when he spoke, he said specifically that he's waiting for average inflation to get to 2% or greater. And until he accomplishes that, they're going to continue to put the foot on the brakes and assist the economy. And when we do get there, we believe that's when they will start to thinking about raising rates and do things they need to do to make sure we don't get into an overheated economy where asset bubbles start, which we believe that you can almost argue today that asset prices, that there's some bubbles that are out there today. So we think the Fed is being very transparent and being very honest, and he's saying until we get average inflation to hit their target, they're going to continue to assist and step in where they need to step in.
All right, Phil Palumbo, Palumbo Wealth Management Founder, CEO, and Chief Investment Officer. Appreciate you coming on here to chat with us today. And as hard as you coach those kids, hope you walked away with the win there, my